Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 8th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, what we can see here looking at the VantagePoint software on the dollar here, we've moved considerably higher. We've had a retracement lower, a little bit of back and forth here. But at this most recent rally up in the dollar here is now showing signs of a failure. Now, when we look at the key VantagePoint indicators, our medium term crossing our long-term predicted difference with our neural index, this is all pointing towards a potential sell-off in the dollar. Now, when we look at monthly institutional flows, the dollar usually sells off around the middle of the month. So the VantagePoint indicators are clearly picking up on that. So at the current time, a retracement back down towards 94.76 appears imminent. Again, when we look at these swings in the market has come back up. We failed at this particular level right here, and we're moving into a verified resistance zone in this particular area. So when I'm looking at these things and again measuring two different trends at the exact same time tells me that again the dollar is likely to move lower. Now we're coming off the non-farm payroll number, still a decent number here, guys. I know it missed consensus at 134, but the fact of the matter is that you had the hurricane in the previous month. That's going to affect the survey headline number. The U6 was a little bit softer, but overall the economy is very, very hot in the US, and it is the unemployment rate change from this previous month is unlikely to change the Fed's direction, which will continue to benefit the dollar going forward. Excuse me. But what we have to understand here is that nothing goes straight up and nothing goes straight down. People don't have to buy stocks, guys, but they do have to. Large institutions must buy currencies to settle their trade balance. So every month we go back and forth, and then about 20% of the time we get into strong trending moves. So this particular move here at the beginning of the month, which I talked about in last week's presentation, that the dollar is likely to strengthen in the first week of the new month. But that's usually about it. We can see a very similar pattern back here when we, essentially we saw the same thing. We ran up here until about the 15th of the month and then down it went. So the likelihood that that's going to continue is very, very high. So this should help gold this coming week. Gold should move higher, but the overall long-term trend on gold is still clearly down. Last month's unemployment number is not going to change the Fed bias of continuing to hike, in my respectful opinion. Therefore, this is not an environment for a strong bullish move in gold. So gold is likely to move higher over the next week or two, but I don't think we're going to see any real trend change here. Now, with the S&P 500, again, we are moving lower, but if the dollar turns lower, the equities are likely to recover. Now, we can see that there's a fairly strong congested level of support sitting right down at this level here, right around 2860. Long still recommended here, guys. And again, we're probably going to get another push lower for a day or two, and then we're likely to see a reversal and the equities hold their gains. And oil is definitely going to get caught up in this too. But once again, with oil, it's not the ideal time of year to be buying oil. Again, in my respectful opinion, we've had a good move up here, but then as you can see, this particular swing here is pretty much ended around this area. So my optimism on how much further oil is likely to move higher remains guarded at this time. I think that oil is likely going to hold below 80, and we could see some decent shorts going forward. Now, as we go into our main Forex pairs, once again here, guys, most of the indicators are pointing towards the dollar is going to turn lower. That unemployment rate, what I'll point out here also is that, in most cases, after we've come off a Fed hike and we've had a very strong non-farm payroll number, the dollar is sold off anyway. So, we have to look at that. So the probability that the euro is now getting ready to move higher is very high. If nothing else, a retracement back to 116.05 is very, very likely here, guys. So again, nothing is for sure, but as you can see, we've had a considerable move lower right here, making a number of different new lows every day, and then all of a sudden we stopped. We've got support forming down here, verified support forming down here. If we connect it back into this area here, this zone all in this particular area becomes verified. So the probability that the euro turns around next week, once again here, guys, when we look at the main indicator, the pink line and the blue line down here, combining it with the neural index, that is clearly pointing towards a reversal to the upside on the euro. Now, things could change. There's a lot of things going on in Europe with Italy and everything else. You've got Brexit, so that's weighing on the euro. But during the average monthly cycles here, it's more likely than not that the euro is going to move higher. So again, we'll see how the market responds to 116.05, but for now, a retracement higher appears imminent at this particular time. So when we look at US Swiss franc, we see something very, very similar with a massive verified resistance zone up to just over the parity level, 1.0061, and we've had a considerable extension higher for about the last week and a half, 2 weeks on this pair. This is likely coming to an end. Also, you can see the medium term crossing the long-term predicted difference in the opposite direction in which the market's moving. Even though we made a new high on Friday, the indicators from VantagePoint are warning that this pair is starting to top out here. So should the equities recover, as I've suggested, that should also put additional pressure on the dollar, sending this pair lower. So keep an eye on this one for some opportunity next week. But we are in a heavily overbought condition on the predicted RSI. Combining that with the medium-term predicted difference, we're simply just waiting for the neural index to confirm that short position and the retracement lower. Now, with the British pound, US dollar, once again, guys, this week, it's all going to be about US dollar strength or US dollar weakness. And most of the key components in VantagePoint are pointing towards dollar weakness. So that could send the pound a little bit higher. But again, we're kind of right in the middle between a verified resistance zone at 133.40 and verified support down in the 127.80 area. So right now, we're kind of right in the middle of the zone, with a heavy bias. So for this particular week, while we enjoyed shorts last week, this week I think we're going to see longs will prevail. We're closing out the week at 131. 130.49 is the critical area to watch. Now, as we look at dollar yen for next week, dollar yen is definitely going to be an interesting setup going into next week. We've got a massive resistance zone here below 115, 114.55. You can see right here our indicators from VantagePoint are turning lower, the RSI falling. So upward momentum is definitely running out of steam. So I would watch this one very closely around this 114.15 area, but in my respectful opinion, we are likely moving back towards 113.05. If 113.05 holds, then we can consider small longs, but again, in my respectful opinion, it's unlikely that we're going to see a lot of buyers up around this 114 area. Now, as we come into our three main commodity currencies, if we look at US CAD, as I said last week here, guys, with the NAFTA agreement, didn't really benefit Canada that much. And what I suggested in last week's weekly outlook over the last several weeks is when the NAFTA agreement does come to fruition, if it comes to fruition, which now it has, it would be a classic case of buy the rumor and sell the fact. We would see we would see the Canadian dollar strengthen, only for it to turn around and reverse once we get that NAFTA agreement, which again really didn't benefit Canada very much, in my opinion. There's even there's restrictions on some of Canadians' exports even under this agreement. So I'm not really sure what the Canadian Prime Minister was doing with this agreement, but it certainly wasn't a very good one, in my opinion. So when we're looking at this right now, we are up against a massive resistance here at 129.50. Now, Canada's Canada's unemployment rate came out last week also, and it was, even though it beat the headline number, guys, if you look closer into the jobs report, it really wasn't that strong. A lot of part-time jobs, a lot of public sector jobs, so it's not the best report, but I think that if oil prices continue to advance, the Canadian dollar will start moving lower. So to start the week here, guys, what I will point out to everybody that's watching this video, it is Thanksgiving long weekend in Canada. The Canadian markets will be closed on Monday. Stay away from this pair on Monday and the early part of Tuesday. If this level around 129.50 is breached, it would probably be in thin illiquid markets on Monday, only to reverse by midday on Tuesday. So if the equities turn higher, oil goes higher, gold goes higher, US Canada goes lower. That's what happens here, guys. So we'll keep a close eye on this one right now. But again, I think that we're going to, if we look at the current levels of verified resistance, we've got resistance zone here, resistance zone here. When we connect those two dots, that comes into a trend line right around the 130 area. So shorts still carry a slight edge going forward. Now, the other two main commodity currencies, which is Aussie US and New Zealand US, once again, if the equities can turn around, gold moves higher, Aussie US is going higher, so is New Zealand US. If nothing else, a retracement back towards 71.80 appears imminent next week. So keep an eye out for an opportunity for longs here. Shorts are very, very risky down here. Despite the crossover we're seeing here, I think we're going to retrace higher before we go lower. So by Tuesday or Wednesday of this coming week, we'll get a very good handle on this. But for now, buying on dips is a preferred strategy, same as New Zealand US here, guys. And as we go back and we look further and further over the last little while, you can see that we are hitting all-time lows here on New Zealand. But when we go back far enough, we can also see that, you know, things are not always what they appear to be. So when we look at this right now, coming down into this 64 area, potentially could really be some opportunity for long trades for us. So once again, when we look at this support level down here, we can identify this going back to 2016, January, and that low point is coming in at 63.46. So again, in my respectful opinion, letting this pair come down a little bit lower, but we should definitely be looking for potential long trades here. And again, this is when we combine this with a known cycle of dollar weakness. If the equities can exploit that, if gold moves a little bit higher, we could see some good buying opportunity on these commodity currencies as early as Tuesday or Wednesday of next week. So with that said, this is the Forex Weekly Outlook for the week of October the 8th, 2020.